Hello, everyone. This is Martin. Welcome back to another week for the weekly updates and trading opportunities that I'm looking at for the week of May the 9th to the 13th. And for this week, I'm going to look at another idea here. And I want to explain that to you. We're going to use the LEOD charts for pullback entries. Now, let me explain what that means. Last week, all the major currency pairs they ended up pulling back or retracing in a major way, and some of the major currencies retraced back. They were actually very sharp pullbacks. Uh, and for those traders who normally do not trade counter trends, I'm going to present another idea to you. Now, normally I would suggest that all newbie traders trade with the wind at your backs, and what that means is trading with the trend. However, with the markets being as volatile as they are, that means going up and down, and with the volatility in the world, mainly due to the banks and adjusting their interest rates and things like that. That's leading to volatility in the market. So there's often good opportunities to play these pullbacks, and I want to show you what you can do to perhaps take advantage of the pullbacks and retracements instead of just waiting for the trend to continue. Okay, so we're going to look at that today. I will explain what I'm talking about when we get to the charts. So starting off, we're going to start off with the Euro USD. Okay, this is the Euro USD weekly chart, and you can see the previous week here with this red vertical line. This is the previous week, not last week, but the previous week. We had a huge bullish engulfing candle, and normally after this, you would almost be thinking taking a buy trade, in my recommendation last week, I did say this pair is trending higher. However, wait. And when I say wait, we're always waiting for pullbacks and then looking for evidence to the buy side for the trend to continue. Okay. Now, uh, I'll clarify that by switching to the daily chart. Here you can see the daily chart, and you can see the red line indicates the previous week, the end of the previous week, and last week's trading started with Sunday, Monday here. It went up higher. And then on Tuesday, you can see we had a massive rejection with this pin bar. Do you see that? Here is a resistance area as indicated with the upper and lower trend lines. Okay, and I'm going to switch again back to the weekly so you can see that. On the weekly chart, I had already drawn this. Do you see this line right here? This is a upper trend line, lower trend line, indicating a bullish channel. You can see price going up, down, sideways, up a little bit, perhaps for this week. Switching back to the daily, so you can see on the daily here, we had a rejection by the sellers. Sellers brought price down, and then for the next few days after that, price continued coming back down. So for last week, I did say, wait for bullish evidence to the upside. We never had that evidence. We do not have one good bullish white candle for us to even contemplate taking a buy trade. So, however, a lot of traders might have missed taking a counter trend trade, which means taking a sell trade. And to get a better idea of a possible entry, let's take a look at the LEOD chart. Okay, so last week, you can see we really did not have even an entry or anything that was indicated by the LEOD chart. However, because this was a pin bar, okay, and this is really super important, pin bar off of, I'm going to switch back here to the daily pin bar off the channel high here. You can see with this um, magenta trend line, pin bar, that means, and this is a tradable candle, okay, guys, and that means you could get in below the low of this candle. So right about there, you would have made some really good pips to the downside, getting in right about there, you would have made at least 94, 98, 98 pips. So on a counter trend, that would have been excellent. Okay, so for this week, what do I see? Well, again, we're waiting for bullish evidence. That means one candle, one good a bullish white candle to the upside. You could possibly put in a buy stop order above the 115.20. Okay, and that is 115.20 way up here. Okay, so a possible buy stop order, and the reason I'm saying that, this is like an inside candle right here. Here's the mother candle. We want to be just above here for buy stop order, and then we've got room to the upside. Okay, so I mean, price may still continue coming back down, but if we are playing the overall trend, we're in a bullish trend, and that's one way of waiting and having the patience to take a buy trade to the upside. Okay. Um, so at this point in time, I would not take any sell trades to the counter trend side at all, okay? Because we may be coming close to a support area right here. Now, next one is the British pound US weekly. Okay, with this pair, you can see that basically price had broken over the last 2 weeks, broken this this triangle right here. Okay, you can see that right here. It's a triangle, so price the previous week broke up with solid strength toward a resistance area in the with the gray rectangle, and I did say last week this pair is trending higher. However, wait, which is the exact same bit of news and advice I gave you for the Euro USD. So both pairs seem to be almost mirroring each other at this point in time. And I said wait, again, meaning waiting for bullish evidence to the upside. Let's go down to the daily chart. You can see exactly like the Euro USD, price bounced off of a uh, resistance area in the gray rectangle. Not only was it a bounce lower and rejected by the sellers, but you can see this. This is a huge, massive engulfing candle. Not only is it an engulfing candle, but it's also a pin bar. And my goodness, I mean, here's a perfect entry. If you were going to play a counter trend trade, this would have been it. Getting in right there after the end of that candle on the Sunday Monday open would have given you at least 100 pips. Okay, so that's why, guys, it is important to take a look and possibly take counter trend trades. Otherwise, you're waiting, waiting, waiting for price to return to the upside in this case, and for the trend to continue. Now, that may not even happen. Price may keep coming back down further and further and further. And I believe with this pair, I have a bias to the sell side. If you want to take a sell stop order below the wick of this candle right here, so you can see below this candle right here, about five pips below that, placing a sell stop here. And I believe price is going to go down to at least the 100, but if it breaks that, it's going to come down even much more toward this gray rectangle. Here we have an area of confluence. You can see the upper trend line of the previous triangle that price had broken, okay? And as well as the 50 simple moving average and this gray rectangle. So I believe price will come down lower, and then you can look for buying opportunity to the upside. Okay. Now I want to go to the LEOD chart, and you can see now this is okay. This is where it gets interesting. When price is coming down, getting very close to the upper yellow line, especially on the daily chart, you now have the option of switching to the 4-hour chart to see if you can get an entry, an LEOD entry. Let's do that right now, and you can see we had one right there. Okay, so if we were using the H4 charts, and you see prices broken the lower yellow line here, the Histo bars are really close to the zero level. You see the histo bars are getting smaller, and the blue line is below the yellow sentiment line. See, the blue is below the 40, 45 here. Okay, the entry, instead of having an entry here, you could have done that with the caution that price was going to go to at least this 50 moving average. However, placing an entry right after that, if that would have been very conservative, and you would have gotten in right there and good for 113 pips. But let me do one thing. Let's draw the trend line. Okay. So remember, one of the rules is price has to break a trend line. You can see that right here. Take a look here with this pin bar to the left side. If you were very conservative, no, that's too far over to the left side. So um, I would have gotten in. See, once price breaks the trend line and price breaks here, you could even on a conservative base, aggressive entry, placing a sell stop right here, and hoping that price would go down to at least the blue SMA. So, anyways, good enough for some really good entries. I believe price is heading down, and you can see the 4-hour chart shows this a lot clearer than the price action. Price looks like it's going to come down further to at least the 200. There's the 200, and so it's got a good room to move down another 90 pips or so. Okay, 90, 100 pips to the downside. Okay, so let's go to the next chart, which is the Australian USD. Okay, everyone. With this pair, we've got a lot of interesting things happening here. This one's an interesting currency pair. This is the weekly chart you can see, and last week we had a massive fall in price here due to weakness in the Australian currency. As you know, last week the RBA, or the Royal Bank of Australia, lowered their interest rate by a quarter percentage down to, I believe it's now 1.75. So that caused this massive drop. Australia is now one of the weakest currencies of all of the majors, and we can probably anticipate further movement to the downside. Although after this last week, we may have a slight pullback first, and then further movement to the downside. So just be aware of that, okay? And let's take a look at the daily now. Last week I did say wait for we were in a bullish channel. You can see last week up to this red vertical line, we were still in a bullish channel between the upper trend line, the lower trend line, okay, and price was still above the 50, the blue SMA right here. You can see that, okay. Expecting price to go higher, I said wait for a pullback, then and that always means waiting for a pullback, then waiting for watching for one bullish white candle to the upside. We never had one white bullish candle to the upside, therefore the buy trades was negated. And now, really interestingly, this is still these lines are still intact here from the weekly chart. You can see we have broken down below this lower trend line, which means price is now, we're now in a sell zone. Okay, so previously we were in a buy zone, we're in a sell zone. Not only did price break below the magenta lower trend line, but you can see we're also price is also below the 50 SMA, and the MACD. You can see that MACD histo bars are also below zero. So we've got a lot of clues telling us that price is now we're looking for sell trades only. However, because price dropped quite a bit last week, I kind of expect a pullback first, then looking for evidence to the downside. Now, I'm going to switch to the 4-hour for this one and to see what just to give you an idea what I'm talking about. Okay, so here you can see prices come down low at the end of Friday. Here's a 4-hour chart. Price is going sideways. I kind of expect price to go higher. Okay, and just like here. Okay, and I'm going to draw a trend line. Okay, so you can see this is what we're looking for. We're waiting for price to go higher, then break a trend line, and then looking for a sell trade to the downside. See this big black engulfing candle getting in right there after that black bearish engulfing candle would have given you some really good pips, about 120 pips to the downside. So right now in the 4-hour chart, you can see the trend lines are all um, heading in a downward direction. The slope is pretty steep. The space between the 50 and 21 is getting wider. So it looks like price is going to keep going down further. Okay. And again, really quickly, LEOD. Okay, take a look. We actually missed the opportunity last week. Okay, and well, I mean, if you were watching it last week, because this is a daily chart of the Australian USD. So this is 1, 2, 3, 4 candles ago, which was on the Tuesday trading. That was the big day where Australia lowered its interest rate. Getting in right after that, I might have been a little bit hesitant because take a look to the far left here, or I'm sorry, the immediate left, and you can see we have a swing low. So this is a valley. Okay, you see price down, price up, price down, and we are at an area of support. However, you could have placed a sell stop order about 10 pips below that area, or wait for pullback, and you still would have made some pips. Okay, and I believe price you can see is pretty clear here on the LEOD chart. Uh, I believe price is going to come down to at least a 200 right there. So there's room for another 100 pips. It's up to you whether you want to wait for a retracement first, just a bit of a retracement, see if you can get in at a better price, or take a sell stop order just below here. That's entirely up to you. But I believe price is going to be heading down, especially with the weakness in the Australian currency. Okay. Now we're going to move to the New Zealand USD. Okay, here we go. The New Zealand USD. This is the weekly chart again, and you can see that price is going up and down, up and down. We're kind of in a upward bullish channel, indicated by this upper trend line, the lower trend line right there. Okay, last week was a huge, almost engulfing bearish candle, showing that sellers are in control, were in control last week, bringing price right down. And it's interesting, even though we're in a kind of a bullish channel, it's going to be interesting to see what happens this week. Last week I said we were in an uptrend continuation. However, price did retrace back down. And again, take a look at this price chart. This is the red vertical line, which indicated the end of the previous week. So price, again, according to what I thought, we were, in a trend continuation phase. Price did in fact go higher. If you would have taken a buy trade at the open market open on Sunday, Monday, you would have made pips. But however, the next day, what kind of candle is this, everyone? See this huge black bearish candle? Okay. If you said bearish engulfing candle, bingo, off of support, not only did I show you the support right here, but take a look to the left, the immediate left, and always take a look to the immediate left. Here we have a mountain peak. You can see that price up, down. So there's a swing high here. Price went right up to meet up with the previous swing high, bounced right back down really hard. Getting in at the open right there would have given you some pretty good pips. And I know what you're thinking. We're close to the 21, but in a massive move like that, you have to take it, and you would have made at least 45 pips, but in fact, holding on to trade would have made close to 90, 95 pips to the downside. Okay, so this is important. Always watch out for those individual candlesticks. They are huge clues, especially when you see them coming off either support or resistance, as in this case right here. Okay, And because this was a counter trend again, and again, a lot of you may not be playing a counter trend thinking that, well, okay, Martin has said that wait for evidence to the upside. We're in a trend continuation. And when you see things like this, you're hesitant to get in. And that's okay if you're a very conservative trader. But let's move to the LEOD chart. Okay. When you see price again, and this is the daily chart. When you see price coming, like especially here, with a huge bullish engulfing candle, or I'm sorry, a bearish engulfing candle coming in to the area between the upper and lower yellow line. You can wait for a candle breakout, or if you're looking for an earlier entry, let's take a look, guys. Okay, and here was the entry right there. Do you see that with this candle? So again, drawing a trend line, okay, and you're looking for you're looking to join another valley. The only I see two valleys. One, here's the first one, okay? You see down up, this candle breaks it, placing a sell stop order just below that with the anticipation that price is going to come down would have given you at least to the blue SMA 30 pips. Holding on to the trade would have given you 74. Holding on even more would have given you 135, 140 pips. But let's draw another. Let's look for another valley. Okay, you can do that as well. Prices come back down, looking for a pullback on the 4-hour chart. There, you see here is a well-defined valley. Price down, price up, and getting in right there. Now, this blue line is the 200. So again, being a little bit conservative, just below the blue, having a sell stop order would have given you at least 40 pips. Um, and I believe price is going to keep coming down to at least the trend line here. So I believe price is going to continue coming down before it goes up. Again, I want to switch to the uh, there we go. You can see here on the daily chart. Let's just zoom in a bit. Okay. Okay. I just want to zoom in. So I think price is going to come down to at least this area, possibly more down to at least the 6,800, like 6,800, maybe down lower, even lower down to this gray rectangle. It could even come down all the way down to this. The 100 and the 200 is down below here too. So this is one of these currency pairs that may come down quite a bit before going higher. But right now we're contained within the channel. You can see here's the lower trend line. So I am actually expecting a bounce off the channel, off this area of confluence. And again, what you're looking for is you're looking for one nice bullish candle to the upside. So one thing you can do is wait for a bullish candle for the upside, but take a buy stop order above the 69.20 area. So 69.20 would be right about there, okay? Right there. 69.20. So having a buy stop order in case price turns around, and it certainly may do that, or waiting for price to come down lower. It's up to you how you want to play this. I'm just letting you know about the different levels right now. Okay, now we're on to the US CAD Weekly, and this was one of the sharpest turnarounds. You can see this right here. This is the weekly chart. We had a huge, massive downtrend, and this is the first huge up candle. This up weekly candle uh, it was good for about 440 pips. So that's a pretty good statement by the buyers, rejecting price from going down further. And I'm wondering if that's reflected in with the price of oil, because you know the Canadian dollar is correlated to the price of oil. Is has oil The price of oil started to top out and it's on its way back down again? I'm not too sure. I mean, technically speaking, it's not. We're not too sure what's going to happen, but it looks like price could go higher in this case. So We'll get to that in a second. Last week I said the downtrend was very strong. Sell with evidence. You still could have made some pips last week. Let's take a look. Okay, here is the here. Well, no, I'm sorry. You could not have made any pips last week because last week with the end of the previous week with the red line, there was no real evidence. I mean, if you would have taken a sell stop order or anything like that, you should have gotten out pretty quick because your stop loss would have been at least above here or even above this pin bar right there. I mean, I would have see these candles are very tiny, and I think I did mention that in the video. I would have to replay the video for me to see. I said caution, price maybe coming to the support area. The candles are very small. When you see things like this, there often spells a turnaround. Okay, these candles are too small, not like these candles right up here. You see my cursor? These candles are they're larger, more defined. Here they're tiny, as if we're running out of steam. And finally, here is a bullish engulfed candle. Do you see that? This candle completely engulfs the previous candle. So there would have been your entry. I would have gotten in there anyways, knowing that this candle wiped out the previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. You see, the close of this was is right up here. Okay, so the movement of the last 9 or 10 candles amounts to almost nothing. With this one candle, this wiped the previous price action history out of the water, and I would have gotten in right there with the strength of the buyers, and that would have been good for at least. Well, in this case, almost 200 pips. Okay, so let's take a look at the daily chart. Could we have seen anything there? Okay, here, this is really interesting. Um, this is really interesting here. I'm sorry, I'm gonna go back to the daily chart, but I want to do something. I want to minimize that. I'm gonna draw in a line here. Okay, do you see that? Okay, let's do that. Okay, I'm drawing in a trend line right there. Let's change the color so you can see it really clearly. I'm going to change it right now just to a blue so that you can see it very clearly. There's a blue line. I'm going to there we go. Okay, do you see that trend line? Price has now broken this trend line, and I believe we're almost into a buy zone here. The histo bars are rising toward the zero, so that means the downtrend is now weakening tremendously. However, we are near a resistance. Again, take a look. We're at the gray rectangle. We are almost at the 50. So again, if you want to take a buy stop order would be um, well above here, okay, and above the 130 uh, uh, 50 area right here if price is going to go to the upside. If we believe price is going to go further back down, then you want to wait and take a sell order below the 127.80, which is right there, or just wait for price to pull back to the 128.60, and let's go down to the 4-hour chart. So this is what I'm talking about. You can wait for price to pull back to here, okay? And let's do something. Waiting for price to pull back to here, okay, about there. Okay, waiting for price to pull back and then taking and looking for either bullish evidence or placing a buy limit order right there. Your stop would be down here, and hopefully the price would then end up going higher, which I believe we price will go higher. So that is another way of playing this pair right here. Okay, and on the LEOD, let's take a look. Okay, so it looks like the counter trend could have been played on the LEOD. You can see this candle right here broke the upper line of this yellow, the upper yellow line. And that's important because if you would have gotten in right there at the open of the next candle, you still would be in profit by about 50 pips or so. That's why, and again, sometimes the LEOD chart shows you a lot of clarity, okay, which the price action chart may not show you. So here it looks like price is heading higher to at least the 50. If it breaks the 50, price is going to go all the way up to the 200. Okay, that would be sort of the next major area. So again, excellent LEOD breakout trade on the 4 hour would have been more pronounced. I've just switched the chart. Look at that, guys, eh? Okay, here's a trend line. This is the, remember I showed you price had broken the trend line to the upside. We're in a buy zone right now. Look at that, eh? This one broke the upper yellow line. You could have gotten in right above there, above the wick of this candle and above the 50. That would have been amazing for close to 300 pips. And then again, another opportunity waiting. See, this is a sideways retracement, um, getting in right here, and after this white bullish candle right there as well. Another retracement, getting in again. So a lot of different entries. Please use the LEOD charts and sometimes find some clarity when you think, when I talk about price pulling back, you can use the LEOD charts looking for entries for the pullbacks. Okay, and finally we're going to go to the, well, not finally, but we've got the U.S. Swiss franc. Okay, here's the US Swiss franc, and you can see that we're basically trending down. We were trending down lower within a bearish channel. Here's the lower channel line, upper channel line. Price was below the 50, and I said last week trending down. I had a sell bias, and again switching to the daily. See, here's the end of the previous week. So getting in right there, yeah, you would have made some pips, not a lot, before price retraced. But the main thing is, again, let's use the LEOD charts to see if we have any entry on the for the counter trend trade here. Okay, now this is important too. I want you to see this before I go to the LEOD. Take a look. Do you see that candle right there? Well, isn't that a huge pin bar? Here's a rejection off the trend line. Okay, and I had drawn the trend line for you guys uh, on the video for last week, and you can see price came back down. Sellers brought it down. Buyers brought it right up with massive rejections. You see that right there. After that, a bullish confirmation candle right there, getting in right there would have given you some pretty good pips to the upside, and in this case, at least 90. Holding onto the trade, 150 pips. So always look for something like this. This is a bullish rejection pin bar. Okay, so just letting you know. Now up here we've got the 100, and I believe once price breaks that, price could go higher. You might want to take, you could possibly take a buy stop order above the 097, maybe 50 mark right there, or 40 mark. I mean, it's up to you if you want to do that, or wait till price comes back down again, a pullback, and then looking for bullish evidence. Okay, but this is what I want to show you. Take a look. This is the daily chart. Here we have price broke the upper yellow line. We are at the resistance of the 50, and so again, just be careful, but it looks like price has room to go higher. Here's the open space. Look to your left to at least here, but this is your 200 moving average. So if price breaks the previous resistance, swing high here, it's going to go higher. So there's room on this to go at least 100 pips or more. Okay, so just letting you know about that. Now we're into the US Japanese, and this is probably one of the most interesting pairs. Okay. Okay, really quickly, we can see this is the previous week. So we had a huge engulfing engulfing candle, and I believe I mentioned after a huge move down, beware, be cautious, wait for a pullback, and again, that means waiting for a pullback, which means let's do that again, waiting for a pullback, okay, and then looking for a selling opportunity or selling evidence to the downside, okay, and if we go to the daily chart, you can see with the end of the previous week, we have a pullback, but no real evidence so far to the downside. Now, this is important again. Two huge down candles, right? Two huge bearish candles. But what do we have here? One, two, three, four, five teensy weensy candles with almost no buying strength. Each of these candles is very small, very weak, do you remember that was in one of the courses I taught you? The size of the candles dictate the overall strength of the trend. And in this case, very tiny. I fully expect price to go down much further. And so again, here you're looking for one bearish candle to the downside, or taking a sell stop order or sell below the 106.36. In this case, 106.36, right around there, and price will at least come down to this area right here. There's still lots of room to the downside on this pair. The Japanese currency is the strongest, one of the strongest right now, and the U.S. currency is weak against the Japanese currency. Okay, the U.S. currency is strong against the other currencies, but against the Japanese yen is stronger. Okay, so just bear that in mind. And again, what we want to do is look at the LEOD charts just to see any trading opportunities. Again, you can see we missed it. Just the daily chart, we missed a good trading opportunity the previous week. Okay, this week price is retracing. Again, that shows you the clarity. You can see price is retracing. We are looking for a break. Okay, break of that trend line, getting in right about there. Okay, a sell stop order right about there. Your stop loss will be very tight this time, just above the highs of these candles. For aggressive sell stop, or a little bit higher. Okay, and you can see the histo bars are well below zero. The blue line is below the yellow here. So that is about it. Really quickly, I just want to mention uh, the few currencies that are strong. Generally, the U.S. currency is strong, except against the Japanese yen, and Japanese yen is very strong. The weak currencies right now are Australian dollar and the Swiss franc, and possible pairs to look at. Okay, I'll have this in my written notes that you'll get with the PDF file. You can also look at selling the Australian dollar Japanese yen pair. So selling Australian dollar Japanese yen, selling Australian dollar New Zealand, buying the euro Australian dollar, and buying the British pound Australian dollar. Okay, so that's it for this week. Hopefully everyone is learning a little bit more. I enjoyed this video presentation because I want to show you the power of the LEOD charts to help you take entries on counter trends, especially when you're afraid to take, when you see price moving against you in a certain area. Always take a look at the LEOD charts to give you some confirmation there. Okay, hopefully that helps. Take care. Happy trading. Talk to you again soon. Bye for now.